And good day and welcome. This is Bill Kaufman with Remote Trading Room. And today we're going to look at our Friday after the close to see how the options for the SPY and IWM did. I'm on the Thinkorswim simulated trading platform, but since it's after hours, these numbers are all current. This is what the market closed at. Okay, the SPY. Let's take a look at the stats for today. Wow, 6 million plus 7 million PC ratio of 1.097. Not too far off for the two of them. Close that up. Time and sales. And we'll give it a couple of potatoes here for the market or for the platform to fill in everything. And it looks like it has just about stopped. Okay. Again, this is the time of the trade. This is the option, the date, the year, what the option was, 430 call, the quantity, price at $16.71. Remember, that's per share. In each option, you have 100 shares. Go multiply that by 100, so that's $1,600, 1,671. Okay, delta, implied volatility, what the underlying was, and any conditions. That says no conditions. Okay, that was the highest call, that was the highest put. Well, let's go on down here, see what we got. Okay. Oh, the first one says it's a spread. 828, 26, 431, and there's the 826, 425 put. So this is a sell. You got a couple of them, 425, 437. All of them are sells. So either there's a color scheme that's not right, or they're just selling the puts. That's only a week away. This is at 445. So the belief here, of course, is the market will stay above 437, 425, 433, in which case the person who wrote the option will get to keep their premium that they sold it for. Okay, let's go back up here. What else we got? Here's one, 834. These two are tied together. Well, excuse me. It says no condition, but considering that they're both done at the same time, that almost looks like they bought the 430 call and they sold the 430 put. So again, this is relatively close. It's only 6 days away, and the weekend's in here, so number of trading days is only, well, we got 4 days. Okay. Here we got a 5,420. They bought that. That's just an outright for September, thinking the market's going to go down. We spoke about these. And we got somebody selling the 470 call only for a penny, 15th September. So that can be as much as they have a covered call. They own the entity here, and they're thinking, hey, if it goes to 470, I'll be able to cash out, because this means they have to sell it at that price. And going down again, here's one that said spread, but not sure what it's tied to. There's another outright call, 446. That's for today. That's already happened. Here's 219. This means 919. The 428 put, the 433 put. Both of them are sells. Again, thinking the market's going to stay above that for the next 2 weeks. Here's one. Happened just after the after hours trading. So after hours market at 1312. Okay, remember I'm on the West Coast, so I'm 3 hours behind New York. So the market closed at 1600, 4 o'clock. But there is a little aftermarket trading. And that's why it says West Coast time, be 1312. So 447 call, 447 put. Buying that, selling that for a week away. So believe in the puts, market will go down. These two, 430 put, 436 put. It says buy at 857, and see, it could be tied all the way up here, 857, 433 put. Well, it's another sell. Yeah, so they could be buying the 436, selling the 433, and of course buying the 430 under that. Again, believing the market's going to go down. So, looks like a lot of trades indicating the market may be going down. All right, let's take a look at something else. Let's look at the other one we kind of follow, the IWM. This is the Russell 2000 ETF, kind of looking at the broad market. Today's stats, almost 600,000, 962, 1.6 put to call ratio. More puts. Time and sales. All right, give it a few potatoes to fill in. All right, looks like it did. All right, we'll catch these two down below. All right, 756. There's three of them right off the bat. What do we got? And they all look like buys. 165 put for December 15th. 75 and 185 puts. Market IWM is at 183.92. This implies market going down to make money. And then here, 7:20 and 7:20 a.m. Mid next week, 15th September, 186, 187. Again, expecting market to go down. 917, 187, 186. These says no condition. And like I say, white usually implies a buy. So, kind of like above, expecting market to go down. And keep going down here. Oh, here we go. These two, same time, 15 December, 195 call, and selling the 165 put. Now this one, believing the market go the other way. The market will stay, is going up, and they financed that buy by selling that, so the market stayed above 165. Let's keep going down here. Two more that are tied together, even though they don't say condition. But you figure if they're at the same time, the odds are they're tied. 184, 183. So this be like a debit spread. Selling buying the 184, selling the 183. So that would imply the market going down for them to keep the premium, or rather to make money. Okay, here are a couple. All the way March 24, 204 call, 172 put. No condition over here. So this could be just they're playing, it's like a straddle, out of the money straddle, thinking the market could go up, covering themselves in case the market goes down. A couple of aftermarket buys, and they look like they're tied together, but they're both imply a buy, which means they believe here the market will be going down. Same here, market going down. Then this one is one of the few that believe the market's going to stay up above 176. It's got a credit spread. They're buying the 176, selling the 176, capturing that premium, buying the 175. So they're not capturing a whole lot. It's kind of like limited liability there. What's the difference there? 18 cents? So they not risking a whole lot of money. Okay. Well, that's a quick overview of the SPY and the IWM for today. And today is September 8th, the end of the week on Friday. Okay, remember this is for educational purposes only. Remember to visit remotetradingroom.com. Thank you very much. Bill Kaufman signing off.